Hello everyone, thanks for checking out my video. It has been a rough August for the US stock market, which saw S&P 500 give back more than a quarter of its massive gains for the first half of 2023. Both S&P 500 and Nasdaq registered their third consecutive week of losses, something that we haven't seen for at least the last 6 months. Shares of mega-cap tech companies such as Apple, Microsoft, Amazon and Meta continued their decline for the week. Specifically for Tesla, it has plummeted more than 25% over the last 1 month. It seems like fear is creeping back into the stock market and investors' optimism is being tested right now. In times like this, what should investors do? Well, I can't decide for you, but I can share with you what I have been doing and will be doing, so stay tuned to find out more. All three major indices fell by around 2% last week, which is a rare scene for the year of 2023. The decline can be attributed to several headwinds. First of all, according to the FOMC meeting minutes that were released last week, it appears that more interest rate hikes might be necessary, and the high interest rate environment could remain for longer than expected. The very next day after the release of the meeting minutes, the 10-year US Treasury yield surged to its highest level since October 2022. So what does this mean? Basically, in layman terms, higher bond yields usually mean bad news for the stocks because the bonds will compete with stocks for investors' money. Therefore, when bond yields go up, investors may shift their money to the less risky bonds, and as a result, the more risky equities often go down. One positive note is that the indices bounced off last Friday's intraday low to close the week, but whether the recovery will continue into this week, it remains to be seen. In addition, investors are also watching the economic concerns in China very closely as property developer Evergrande filed for bankruptcy protection in US court. In case you are wondering why China's economy matters and how it can affect your US stock portfolio, again, to put it very simply, for the last 2 decades or so, China's economic growth has been a major driver of the global economy. Therefore, a decline in their economy will potentially slow down the global economic growth. And not to forget, some of the biggest US companies such as Apple, Tesla, Nvidia, Starbucks and Nike have direct exposure to China and its consumers. So, on whether last Friday could just be a short-term bounce, I would think it depends on 2 key market catalysts this week, namely Nvidia's earnings and Jerome Powell's Jackson Hole speech. Firstly, I would think it's fair to say that expectations are really high as we head into Nvidia's earnings, which is taking place on Wednesday, 23rd August after the closing bell. To recap, Nvidia's last quarter's earnings was impressive, and their forward guidance was nothing short of spectacular. So when you set the bar so high, you better deliver. In fact, meeting their own expectation may not be enough considering the stock has been on a monster run since the last earnings date. I think Nvidia needs to beat its own guidance and set an even better or higher forecast to prevent the classic buy the rumors, sell the news case, where investors dump the shares after its earnings report. Overall, I would think Nvidia's earnings will likely have a big impact on the broader market, especially semiconductor and AI plays. No pressure Nvidia, no pressure. Okay, the next potential landmine for the week is none other than our favorite Jerome Powell. He is going to have a speech on Friday at the annual Jackson Hole Symposium. I would think he's going to give some ambiguous points again on further rate hikes, such as the Fed is leaving the door open for more rate hikes, they're gonna study the various economic data, blah blah blah. And in case you are new to the stock market, just wanted to share that how we interpret his speech is not important. More importantly, it's how the big institutions and players perceive his speech. They can somehow always tweak it to fit their narrative and then to bring the market up or down to their favor. Moving over to the technical analysis segment. So last week I shared that there is this very crucial area to watch, which is between 440 to 442. And if this area breaks, SPY will likely head towards sub 430. So last Friday, SPY went as low as 433, almost reaching sub 430 already. Right now, SPY is sitting right at the bottom of this tight downtrend channel. This week, I think we can expect SPY to continue to test the bottom end of the channel. If it starts closing below this channel, it is very bearish for SPY, and we could have a high probability to hit that 38.2 Fibonacci level at 428. This area is also where the 100 moving average sits, hence forming a double support. If this level gets breached, one will lead to another. We may then head towards the gap at 421 to 422. At this area, I would like to highlight two key important things. One is this green dotted line, which is part of the uptrend channel. This area must not be breached. Why so? Remember I talked about this so-called pivotal level for SPY? That's the second thing, which is at 420. So by going below the green dotted line and below 420, I would say the overall market trend has turned bearish. That's when more downside could be unlocked, probably till the next critical Fibonacci retracement level at 409. In summary, watch out for the area 420 to 422. Bulls must protect this area. On the other hand, if Powwow and Nvidia gave us some good news and boosters, we can then expect SPY to test the top end of the downtrend channel, as well as the 440 level that was lost last week. So I would say it's around 438 to 440 area. So yeah, that's the key resistance area to watch. If we can punch through this level, we can almost expect SPY to charge towards the 50 moving average at 444. Bulls should be excited and bears should consider exiting their shorts if SPY flies towards the gap between 453 and 455. Because at that level, we will then have a high probability to move towards the top end of the uptrend channel at around 459, 460 levels. Let's now move over to Apple. Again, remember last week I mentioned that Apple was holding on to this 177 crucial support level for its dear life, and we could just head down a little to fill that gap between 175 to 176 before bouncing up. And if it doesn't bounce, we may then go towards 170. Well, guess what? Apple indeed dropped to 175 to fill the gap and went as low as 171.96. We are just a bit off that support level of 170. Well, my technical analysis wasn't perfect, but I think Apple pretty much moved based on what I have shared last week. I have linked my last video at the top, check it out if you want. More importantly, I also shared that Apple has a low probability of bouncing up so fast, and I mentioned that one can consider selling covered call, which is a bearish move. I know it wasn't a financial advice, but if it had benefited you or if you have found my analysis useful, please help to tap the like and subscribe buttons, okay? Anyway, in terms of downside, it remains the same for this week. Watch 170 closely and watch that huge gap closely as well. The gap is between 166 to 170. If 170 gets breached with Apple closing below it, I think there is a high chance that Apple may just fill the gap all the way to 166, similar to what it has done last week by filling the previous gap. Okay, this area is where it gets interesting, because if I zoom out the chart, you will be able to see this long-term grid dotted downtrend line. Alright, here's textbook 101 stuff. It's normal for a stock to break out from a downtrend line and retrace back to retest it. So here comes the key thing to note. The retest is important. If buyers don't step in and Apple does not bounce off this line, then the trend has turned bearish. That's when we can expect Apple to start hitting that 164 level. Below that, that's where I will get super excited and may pick up shares more aggressively. Some levels to watch is the 200 moving average at 161 and the Fibonacci level plus the gap area, which is around 158 to 159. But I would think it's a little far-fetched for Apple to hit this area this week. But then nothing is impossible in the stock market, right? On the upside, it's quite straightforward. Apple needs to reclaim a few Fibonacci levels to turn the trend around. They are 177, 181 and 185. Out of the three levels, I would say 177 is more important, and that should give Apple like a base support to fall back on if it can close above it. Anything below 177, which is like now, I wouldn't go long in terms of options trading. I mean, that's just me. For full-blown bullish mode, Apple has to reclaim that huge gap at the top between 187 to 190. By doing so, it also means Apple will reclaim the 50 moving average. Once again, I think it's an uphill task in the next 2 weeks. Okay, moving over to Tesla's chart. Well, I don't think you need to be a rocket scientist to see that Tesla is looking very bearish. I mean, it has fallen from close to 300 level to the current level of 215. That's about 28% drop. To make things even more bearish, it has fallen out of this downtrend channel marked by the 2 blue dotted lines. So what's next? The next area to look out for is the support area of 208 to 211. This area is formed by 2 Fibonacci levels of short-term and long-term trends. Sorry if the lines look a little messy. As Tesla has been very volatile, therefore testing this area should not come as a surprise this week, because it's only a 7-point drop from 215. From there, Tesla has to hold. If it doesn't, I would say we have a high chance of hitting the psychological level of 200, followed by the 200 moving average at 196. So yup, in summary, watch out for 208 to 211 area. Alright, before I move on, a quick shout out to the viewers out there. This channel needs your support. I am hoping to hit 1000 subscribers as soon as possible. It has been almost 1.5 years since I started this weekly market analysis. As I continue to churn out this content for free, I hope you can help me out with tapping the like and subscribe buttons. It will help the channel grow. Other ways of supporting the channel include signing up the various services such as Weibo, Utrip, Tiger using my referral links. All these are at no cost to you. But if you are okay to spend $4 to buy me a coffee via my coffee page, I would be very grateful. Okay, on the other hand, Tesla is approaching the oversold level on the RSI. Therefore, a short-term bounce or holding pattern could be on the card. But a quick disclaimer, the bounce, if it comes, may not be a huge one. A small bounce is still a bounce, because market makers can just let it bounce a little bit, cool off the RSI indicator, before dumping more shares to bring it to the critical 208 support level. Anyway, for Tesla to stop the rot, it has to bounce more, of course. It has to go back into the downtrend channel and stay within it. That means Tesla has to close above 218 to 220 level. And the longer Tesla remains in the channel, the higher chance we will go up to test the top end of the channel, which lies around the 230s range. Overall, I would say Tesla trend is very bearish until it starts going back into the channel. By going back into the channel, it just means it's less bearish. But if it can break free from the channel, then it's slightly bullish. Finally, let's check out Google's chart. Well, Google, just how long do you want to consolidate? As shared in my previous video, Google has been consolidating between 127 to 133 range, and it was still doing the same thing last week. Somehow, the support level of 127 seems to be holding up quite well, hence making it an important level to watch. If 127 breaks, it means Google is also breaking its consolidation phase and more downside could be unlocked. That's when the gap between 123 to 126 will come into picture. Within the gap, we do have a decent support at around 125, which is formed by one of the Fibonacci retracement levels and the 50 moving average. If this level doesn't hold, we could then head towards 122 where the next key support level is. Overall, I would say 122 and 125 are relatively strong support levels, so it will be very tough for bears to bring Google below both levels amid the current market pullback. So maybe you can just consider selling cash secure puts slightly below this level. Well, not financial advice. But this also means that if both levels gets breached, Google will be very weak. That's when the support level of 120, the gap at 117 to 118 will all come into picture. In fact, below 120, I don't see a lot of support. If we ever get here, I think bears should get really excited. The potential downside is actually quite a fair bit. Okay, let's now move on to my option trades. I don't have much to update this week, just 2 trades. The first one is this Tesla's covered call with a strike price of $385 that expired last Friday, 18 August. This contract was sold on 14 July. More information as to why I made that trade at that point can be found in the video link at the top. And in case you are not aware, covered call is a bearish move. Ever since I sold the contract, Tesla has been falling and the contract expired worthless last week because Tesla has never gone close to my strike price of $385 at all. Therefore, as a result, I got to keep the full premium of $155 without doing anything. The next trade to update is this cash secured put on Tesla that is going to expire this Friday 25th August. The strike price of $220 has been breached as Tesla is at $215 right now. The trade is down about 200%, but if you have followed my past videos, you will know this is nothing too alarming because we have seen a 1000% swing from negative to positive before. And oh, just to clarify, this loss has not been incurred yet, it is only paper lost. Anyway, if I were to just show all the contracts that expire worthless and how I kept getting all these premiums, I think this segment will be boring, isn't it? So I think it's good when there are trades like this where things may not turn out to how we want it to be, and I can show viewers my plan to handle such trades. Which I hope such content is useful. If it is, please help to hit the like and subscribe buttons, okay? Alright, come this week, if Tesla bounces above back to 220 and if the profit is decent, I may close the contract. Or if we can get a big bounce, then I may let it expire worthless. But let's say if Tesla continues to fall, then I will decide whether do I want to take the assignment. In other words, acquire 100 Tesla shares at 220 and start selling covered call. Or do I roll the option further? Honestly, it's 100 Tesla shares, so I would prefer acquiring them below $200 if possible. Therefore, I may just roll it down and out. For updates on this trade, please stay subscribed to my channel as I will let you know how it pan out. Alright, once again, some end thoughts for this video. Well, the optimism that fueled a massive 2023's rally has been put to test this month. Negative news such as sticky inflation, higher interest rates for longer period, slow growth in China's economy have resurfaced again. And in case you did not realize, we are more than halfway through the month of August, and can you believe that tech-heavy Nasdaq has only posted just 3 green days? That's the extent of sell-off we had in the tech industry. Anyway, last Friday's late rebound was nice to see, but then, investors shouldn't get too excited yet because one day doesn't make a trend. The market was, in a way, due for a bounce already given the massive sell-off for 3 consecutive weeks. This week, in my opinion, is crucial in setting the tone for the next few weeks. As mentioned earlier, we have 2 key events in Nvidia's earnings and powwow speech. These events may potentially determine whether the downtrend continues into September. One thing to look out for is whether the 3 major indices close below last Friday's intraday lows. If they don't, that's positive sign for the bulls. If they do, then the downtrend could continue and the selling could intensify. For more information on the key levels, please check out my technical analysis segment if you have not, and stay subscribed for weekly updates as things change from week to week. Meanwhile, I know there are people who believe that the market is particularly vulnerable right now because of the headwinds that I have mentioned earlier, such as the surge in bond yields, slowing China's economy, interest rate hike, and whatnot. It's like investors are rethinking their optimism that was developed since the beginning of the year. As a result, we can expect stocks to remain volatile, probably to the next quarter's earnings in October. Also, some investors may think it's time to be defensive again. Well, I don't know about you, but I don't think it's time to get too bearish yet, unless key technical support levels break. Also, I can't dictate or offer you any advice on your short-term investment plan, but I can share with you mine. Actually, mine is very simple. I'm just picking up shares more aggressively this month as compared to the first 6 months of the year. If you have been following my videos closely, you would know that I was doing something similar somewhere at the end of last year, before the market went on a massive rally this year. But a quick disclaimer, this does not mean that I am good at picking the bottom. I basically just dip my toes in when there is some fear in the market, and I go in more aggressively as the fear deepens. The point here is some of you may hear noise, but I see buying opportunity. I have been deploying my cash quite a fair bit over the last 2 or 3 weeks since the start of August. I have been picking up shares of Apple, Tesla, Microsoft, and even the index S&P 500 as the market continues to dip. I may not be able to pick the bottom, but I am happy with my purchases. I mean, at the end of the day, long-term investors shouldn't try too hard to pick the bottom. Just focus on your watch list, which should contain stocks that are fundamentally strong and are showing relative strength in such market turmoil. Then set some price targets and enter. Alright, that's all for this video. If you like my content, please help to tap the like and subscribe buttons. It will greatly benefit my YouTube channel. Thank you very much.